Today, big tech cooled down as the financial sector is trying to bounce back. Is a big move in the stock market coming right around the corner? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today SPY was up 0.19%, so we really didn't go much of anywhere, and it was all on very low volume. And if I zoom out here, you can see that SPY has gone absolutely nowhere, going all the way back to November of last year. So I do think we're about to see a very large move in the market coming just right around the corner. And while my opinion is irrelevant because we follow price action, I do think there is more probability this move is going to be towards the upward direction. Now, if you're in the Stocks Channel Discord, I've given lots of reasons why that is likely going to be the case. We just need price action to now confirm it. So do be aware there is a very large move when the market consolidates for this many months going absolutely nowhere. That is just building up energy during this period of consolidation, and that energy is going to be released through the price action over the next couple of weeks. So watch this wedge forming on SPY very closely, which is going to be these lows down here right around 390 and these highs right around 400 to about 408. This is a very wide trading range that we've been in, and it can be very frustrating if you're a buy and hold investor. But as a trader, this has been a great opportunity to trade the range waiting for the breakout. So now looking at the price action of SPY, we know a big move is likely coming, and we need to follow where we need to break out to get the large leg in the market. And to the upward direction, that is going to be this level at SPY 400. Above 400, we break out of this downtrend look of lower highs, and we can start to put together a bull trend in the short term. So 400 on SPY is going to be the catalyst to send us to higher prices. Now in the downward direction, I am currently looking at SPY 389 to 390, and we need to break down below that critical support to get things moving to the downside a lot faster, which will easily take us down towards 380 to 377. So in the short term, we did hit the bottom of that range 2 days ago, and that was the test of 389. And right now we're likely coming up to the top of that range to test 400. So over the next couple of days, expect to see SPY testing this resistance at 400, and if we break out above it, that is going to be the bullish catalyst that we're going to much higher prices. And the first one would likely be that gap fill at 408. So be patient and let the price action guide you from here and know the range. And then when we clearly break that range in either direction, that is going to be the price action telling you where the next move in this market is coming. On the NASDAQ 100 triple Qs, we were down 0.69% today, and the big tech companies were cooling down today as the triple Qs are running into that resistance at the previous daily high at 312. Now looking at the price action, we did get a bearish daily candle that fully engulfs Friday's price action, but we did still close above all of the moving averages, and we still do have a bull trend. So on the triple Qs, one of the most critical support levels is going to be the zone between 305 and 307, and as long as we're above that critical support, we are still working on a bull trend. If we break down below 305, then it looks like we're getting a lower low, which means we could come all the way back down towards 300. On the break of 312, we're likely going up here to fill the gap at 322, so that is going to be a very impulsive breakout if the price action can break above that resistance, because there is very little resistance above 312 until we get to that gap fill. On the Dow Jones, we were up 0.62% today as the Dow Jones is back up towards some critical resistance, which is this negatively sloping 20 daily moving average and critical resistance zone around 324. You can see that we did gap up and we left the gap open, so there is the possibility that Dow Jones can come down and fill this gap at 322.5. Now, if we don't fill the gap and we break the resistance at 327, that is likely going to be a breakaway gap, which means we're going to higher prices on the bull breakout. So above 327, it will look like we're going to start running towards 335. The critical downside support will be this gap fill around 322 and 317, because if we break that support, we're likely going down and fill the gap at 311. On the Russell 2000 IWM ETF, we were up 1.11%, and it's a very similar analysis as the Dow Jones because we gapped up and did not fill the gap, and this gap is down here at 172. If we leave the gap open, it looks like a breakaway gap as we run up towards resistance at 177, and the bull breakout above 177 will bring us to close the gap just above 181. If we start heading down lower, we have the support at the gap fill at 172, the December lows at 170, and below the December lows, we're likely going back to the September low, which will take us down to about 164. On the ARKK ETF, we were up 0.08% as ARKK has price action back below all the moving averages as it's rolling over here from that double top rejection at 40.5, and we need the confirmation of the breakdown below the neckline at 36 to tell us we're going down to close the gap below 32. So in the ARK ETF, stay bearish below 39, which is a critical resistance zone. And if we do break above 39, then you're looking for the possibility of that stronger resistance above at 40.5. We're instantly getting more bullish if we break that resistance, but we're bearish while we're below it. On the VIX, we were down 5.15% today, so we are seeing the VIX getting crushed, which tells us that fear is starting to leave the market. Remember, the VIX down below 20 tells us we could be heading back into a sustainable bull rally, but the VIX above 20 is still a volatile market with elevated volatility, so just be cautious until we get the confirmation with a couple of closes back down below VIX 20. On Bitcoin, we're currently down just over 3%, and Bitcoin is still struggling at this resistance zone at 28,000, which means we can be coming back down towards the rising 20 daily moving average and breakout zone of support right around 25,000. You can stay bullish above 25,000, but if we lose that support, that is a bearish indication that we could be going to lower prices. If we break out above the resistance at 28,000, the next target higher will be 30,000, and then just above that, I have another price target at 31,785. On Google stock, we were down 2.83%, and we are starting to see that pullback from the resistance at 106 back down to the breakout at 102. This is completely normal and it should be expected after such a strong push higher that we need to consolidate. So you can buy the dip off of this support between 101 to 102. And then if we break down below that support, we're looking to retrace back down towards this rising 20 daily moving average. So this is still bullish and I am looking for a higher low in Google. We just need to see where that higher low is going to be. And then when we start to bounce, we're likely go up towards that price target at 110 on the breakout above 106. On Amazon stock, we were down 0.09% today, so we went absolutely nowhere and we closed right on top of critical support yet again at 98. You can see we are building up a bull trend as we consolidate above support, and that 20 daily moving average is positively sloping, so we have a lot of support between 95 and 98. If we lose that support, we still have support right around 94, but if we break down through all of that support, we're likely coming back down to 90 and then 86, and the bull breakout at this point is going to be above 101 to 102, which will easily send us to the higher target at 109 and 115. On Microsoft stock, we were down 1.49% as Microsoft is getting a pullback from this resistance zone at 283, but we're still seeing price action closing above all of these moving averages with the bull trend, and we have that gap to fill above just above 285. So I think there's a very good chance while Microsoft is trading above 274 that we are going up to fill that gap. If we break down below support right around 272 to 274, then you're looking for strong support down here right around 267. On Nvidia stock, we were down 0.93% as we are getting that pullback from that overextended condition, but price action is still above all the moving averages with a strong bull trend. So even though I think we're coming down towards 258, you cannot rule out the possibility we bounce from 264 and try to go higher. Higher targets will be above 274 to send us to 282.5, and we're bullish as long as we're above 258. On Tesla stock, we were up 0.74% today as Tesla did get rejected from the resistance at 197 and came back down towards support at 190. There was a gap up open and we did fill the gap to the downside, but we also still have this gap down here right around 186. So if we break support at 190, look for the gap fill at 186 and strong support at 183. If we break out above resistance at 197, we're looking for a very quick chip up to 208 and then 215. On Apple stock, we were down 1.23% today as Apple is finding resistance right around 160, but we still have this bullish trend and this inverse head and shoulders breakout above the neckline at 156. So critical support in Apple remains 156, and if we break that, we could come back down towards 150. My next upside price target remains 163, and on a break of 163, we'll be looking for the top of the channel around 169 to 170. On the financials, we were up 1.39% today as the financials are getting another dead cat bounce back over the 5 EMA, and we're still below this resistance zone right around 32. It's going to be a lot more bullish if price action can break above 32 and start trending higher. On the industrials, we are up 0.84%, continuing that strong bounce off of the price target at 95, and we are back over the 5 EMA, but we are still in a bear trend, especially while we're trading below 99 to 100. The healthcare sector was up 0.41% today, getting another bullish day after that strong bounce on Friday, but we need to break this critical resistance zone at 129 to 130. So jumping back over to the S&P 500, without a doubt, the market has gone absolutely nowhere for many months, which means there has been plenty of consolidation in the price, and we are getting ready for a very large move in the market. This could easily be double-digit returns for SPY or double-digit losses, so know the critical risk levels for the breakout above resistance and below support, and have a trade plan that is ready for either scenario. Remember, no bias, let the price action tell you which direction we're going from here because it'll be a very impulsive breakout when we see it. So have patience and have discipline and always use great risk management. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You can find out how to join the Discord server by clicking on the link in the description of this video. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.